Congratulations. You just bought a Tesla Model Y. The delivery went smoothly. The app works. The screen glows. The car pulls silently out of the lot. And for a moment, you feel like you made the smartest purchase of your life. No gas. No oil changes. No engine to brake. But while you were admiring the glass roof, something else was happening. A monthly payment was activating. An insurance company was calculating a premium higher than you expected. A set of tires began wearing down faster than any tire you have ever owned, and a depreciation curve started pulling money out of your future, quietly, every single day. You thought you were buying a modern, efficient, practical electric SUV. What you may have actually bought is a long-term financial commitment that costs far more than the sticker price. So here is the real question. How much will this car actually remove from your bank account over the next 5 years? And which single expense will hurt more than all the others combined? Hold that question, because the answer is not the one most Model Y buyers expect. Let's start where you started, the advertised price. In 2026, the Model Y lineup begins around $40,000 for the base standard version and climbs toward $50,000 for the popular premium all-wheel drive, with the performance version pushing close to $60,000. That entry number is what the ads show you. But before you drive anything, Tesla adds mandatory fees, roughly $1,600 in destination and order charges. So the $40,000 car is already closer to $42,000. The $50,000 car is closer to $52,000, and you haven't paid a single tax yet. And the state wants its share too. Sales tax and registration push the price even higher. And many states now charge annual EV registration fees as well. You expected the bills to slow down after signing the paperwork. They don't. In fact, they're just getting started. Then the first insurance quote arrives. And this is where the Model Y stops feeling cheap. Full coverage on a Model Y in 2026 typically runs somewhere between $3,000 and $4,500 a year, with several national studies putting the average above $3,800. That can be roughly $1,000 more per year than the average vehicle, and in expensive states, quotes can pass $5,000. Why? Not because the car is unsafe. It's one of the safest crossovers ever tested. Insurers don't price safety ratings. They price repair bills. A Model Y carries cameras in the bumpers, sensors in the panels, and a structural battery under the floor. A minor collision can require original Tesla parts and camera recalibration. A moderate collision can total the entire car. So the insurer charges you in advance for the repair you haven't had yet. Over 5 years, insurance alone could remove $15,000 to $17,000 from your account. That's shocking. But here's the problem. Insurance still isn't the biggest expense this car will create. That surprise is waiting a little further ahead. Maintenance tells a similar half-true story. No oil changes, no spark plugs, no transmission service, brake pads that can last ages, because regenerative braking does most of the stopping. Routine upkeep may stay relatively inexpensive compared with a gasoline SUV. For a moment, it feels like you're finally saving money. Then the bill simply changes its name, tires. Your Model Y weighs more than a comparable gas crossover because of the battery, and it delivers instant torque every time you touch the accelerator. That combination grinds rubber. Many owners see the factory tires wear out between 25 and 35,000 miles, and aggressive drivers can go through them faster. A full set of EV-rated tires typically costs $1,000 to $1,500. Over 5 years, you may buy tires twice. The car with no oil changes still hands you tire receipts that look like repair bills. And when something bigger does go wrong outside warranty, a screen, a sensor, a suspension component, a door handle, individual repairs can run from a few $100s to well over $1,000, partly because the repair network is smaller than for mainstream brands. The basic warranty covers 4 years or 50,000 miles. On a 6-year loan, you may still be making payments after that protection is gone. You might think repairs are the hidden villain. They're not. And here is the counterintuitive twist. Everything you've seen so far has been visible. The next cost is the one most owners never actually watch happening. The very things that make the Model Y cheap to run are not the things that decide what it costs to own. You bought it for the fuel savings, maybe $1,400 a year saved, versus a gas SUV, but the higher insurance can quietly claw back $1,000 of that every year. And depreciation can take more from you annually than a gas SUV spends on fuel. There's one more twist buyers keep forgetting. The federal EV tax credit that once knocked $7,500 off cars like this expired at the end of September 2025. It's gone. Today's buyer pays full price, while the used market still remembers the discounted one. The cheapest to-fuel car in its class may be one of the most expensive to simply possess. So let's total the damage. One realistic 5-year scenario for a $50,000 Model Y, charged mostly at home, around $27,000 in depreciation, $9,000 to $10,000 in interest, $15,000 to $17,000 in insurance, around $3,000 in electricity, $4,000 to $5,000 in maintenance, tires, and fees, sales tax and registration on top. Depending on your state, your credit, and your insurer, the true 5-year cost of ownership could land somewhere between $55,000 and $65,000, roughly $1,000 a month, every month for 5 years. Major cost to own estimates put the Model Y in a similar range, and to be fair, that's actually competitive for a luxury electric crossover. But it is nowhere near the "it basically pays for itself" story you may have heard. Now compare it to the car it competes with in millions of American driveways, the Toyota RAV4 Hybrid. It starts thousands of dollars cheaper. It can cost $1,500 to $2,000 less per year to insure. It burns gas, yes, maybe $1,400 to $1,600 a year of it, but it historically loses a smaller share of its value from a smaller starting price. Add it up, and over 5 years the RAV4 Hybrid could cost you $10,000 to $15,000 less in total. In a typical scenario, the Model Y is quicker, quieter, more advanced, and cheaper to fuel. The RAV4 is cheaper to own. Those are two different sentences, so congratulations. You just bought a Tesla Model Y. Not the $40,000 or $50,000 car from the advertisement, but the $60,000 loan, the $17,000 of insurance, the tires, the fees, and the $27,000 that will silently leave through the resale value. The purchase price was only the beginning. The real cost was everything that came after you smiled for the delivery photo.